Morning, everyone. Good morning, traders. Good morning, YouTube. Hope everyone's doing well and is excited by this market, this nice little bull run that we were talking about yesterday. I wanted to look for some dips in the market yesterday, and that's exactly what we got. We're pressing really high right now. We're back into that 40-50 region in the S&P. So I'm going to talk about some levels, some ideas, and the potential run up into the overall Fed announcement, which is next week. So there was some news yesterday, right? We continued the earnings period. We're going to talk about Tesla. We continued with the GDP numbers that came out this morning, and a lot of eyes were on that. So first and foremost, I want to talk about Tesla earnings, right? Tesla rarely misses earnings. I can't remember the last time they missed earnings, and Elon Musk always pulls something out of his bum. So they beat earnings on the Q4 earnings call yesterday, and shares rocketed about 5.5% during the extended hours trading session, I should say. And during the presentation, Musk also offered his perspective on the state of the U.S. economy, autonomous driving, and Tesla's position as an AI company. But his most impactful statement pertained to the production and sales outlook for the full year. Now, CFO Zachary Kirkhorn added that the price cuts in the U.S. were pursued in light of taxation regulations and not demand concerns. So Cybertruck also remains on track to see production starts later in the year from the Austin Gigafactory, while Tesla plans to share details on its next generation vehicle in the upcoming Investor Day on March 1st. So Tesla really helped that pop, right? This helps the overall market actually sustain some of the upside too, being a larger tech companies naturally. So Tesla now trading in the 158 region, right? Yesterday into the close, they were trading at 144. So up really aggressively, right? Up 11 points. The thing is up huge off the lows, right? It's up 10% right now pre-market off the lows of the year. Let me just do some of that. Let me see where it was, where it's at right now. So off the lows, right, we were trading around $100, right, $102 or so. And right now we're trading at that 158 region, which puts us at a 55% increase for this year alone. That's insane from those lows. So Tesla's been really pumping, and this upside has helped the overall market actually continue higher as well. So yesterday I was talking more about that lift in the market. I wanted to see a little lower in the SPY, but there was still opportunity to get in some of those longs for the next week. Now, we also should talk about the GDP, because the key GDP numbers came out this morning, and I'm just reading it right here. U.S. GDP Q over Q advance came out at 2.9% versus 2.6% expected and 3.2% last quarter. So far in 2022, right, we've completed the quarters. Q1, there was a negative GDP print. Q2, a slightly negative GDP print, which would 2 consecutive GDP prints puts you into a recession, a technical recession, right? And then Q3 and Q4, positive GDP figures, and we'll see how that continues. Now, this number, right, initial dip, maybe some people were thinking, okay, this economy can sustain those rate hikes, and now we're continuing higher. I think we're going to continue this grind higher, and there's some key levels that we do have to watch for. But this morning, all investors, traders, everyone was looking at how they were looking out for the signs of how strong or weak this economy is, and realistically, no better data point to kind of gauge that today. So the U.S. Commerce Department will publish, or they did publish, the fourth quarter results. Like I said, I gave you the numbers, and if the unemployment rate rises and the Fed isn't able to pull off a soft landing, right, we could see that recessionary action take place in 2023. So it's all realistically all comes back to what the Fed wants to do and how the Fed is going to navigate this, right? This is going to be the main perspective. If the Fed goes for a soft landing and starts to ease on the hikes and potentially pivots, we can see that bottoming out maybe even sooner than new lows in 2023. So data points have been all over the place in recent months, right, implying mixed signals about the economy in various sectors. Retail sales have weakened naturally. Factory production has declined, and activity in the housing market has also declined, right? And these are very key economic metrics that we can't take away, or we can't stray from, and we can't just ignore them, because these areas, right, they signal that weaker economy. Job cuts are coming, so on and so forth. And all of that is going to be based on what the Fed is going to naturally do. So industrial production has been down for 3 months, and the capacity utilization has been down for 8 months. So that's signs of a recession are either here or very near. Realistically, probably here at this point. The variables tend to be biased towards the real part of the economic output, not taking in things like services, but they still tend to capture movements in the economy that they're a little bit ahead of the more general changes that most people look at. So As the White House continues to stare at this possibility of a recession with limited fiscal options, Biden is likely to highlight what the alternatives would be in his current economic policy, and he'll likely hone in on those today as he declares GOP uh, proposals like national tax sales or sales tax. And in his major economic speech of the year, this is most likely going to be the focal point. So, when faced with recessions in the past, Democrats and Republicans have also worked together on fiscal stimulus measures like suspending the payroll tax or extending unemployment insurance. But that looks like less likely this time around, especially as the overall subject of the debt ceiling is very, very present. So in terms of news, that's the main thing that we want to look at today, right? I still think there is some bullishness in this overall market. We're climbing higher. We're continuously pushing. S&P futures are trading right now at they traded 40.60, right, with the potential to get into a smaller distribution block to the upside, which sits at 40.65, and we can get into that 40.70. Now, realistically, I want to see a target of 41.05. I don't know if that hits today, but I'll be looking at some of these dips to buy, right? If we break and retest would be interesting, right, back into the 55 region, but I think 40 is a really good pullback area, 48 and 32. You have to keep in mind what that 32 looks like, because the 40.32 is a huge pivotal area where there were a lot of buyers into the recent week, right, which naturally failed yesterday, but a lot of buy side pressure goes above that level. So back below that level, you enter a distribution block that opens up to the downside, and we can possibly see the 4005. I don't think that's very likely, but back below 4032, it gets shaky for these bulls naturally. 4025 is the last chance for the bulls, but I think that they do take this, and I'm going to be looking for maybe a dip in the morning to kind of pick this rally up again. If it just starts off with aggressive buying, it's going to be a little harder. It's going to be a trend day, but we want to see slight pullback so we can look for that long targeting at 4105 realistically. So with that being said, I want to open up the trading rooms. I hope to see you all there. Remember, we got that free membership side on the website. Go check that out, and community.tradeproacademy.com for our free Discord group. So I hope to see you guys there, and take care. Tomorrow's Friday, and let's have a good end to the trading week. Thank you and bye.